The Bank of Canada slashed interest rates again, down to 2.75%. This is the 7th consecutive cut, and it could completely change the game for homebuyers in Toronto. But is this really good news? Or is there a hidden catch? With mortgage rates dipping below 4%, thousands of buyers are gearing up to jump back into this spring market. But at the same time, 400,000 mortgages in the GTA are renewing at a significantly higher rate, meaning more listings could flood the market. Will this trigger a price surge, or are we heading into a more uncertainty? Hey there, I'm Matt Sloan, a realtor here in the Greater Toronto Area, and I know I have to ask in order to continue to grow my channel. So if you wouldn't mind, please take 2 seconds to hit that subscribe button. It would really mean a lot. And if you do like this video, leave it a thumbs up. Let's start with the big news. On today, March 12th, 2025, the Bank of Canada cut its benchmark interest rate by 25 basis points, bringing it down from 3% to 2.75. This marks the 7th consecutive rate cut since mid-2024. Now, why did they do this? There are a few key reasons. 1, economic slowdown. The Canadian economy has been facing slower growth, partly due to uncertainty around trade tensions with the US. Next, inflation control. While inflation has cooled from its 2022 and 2023 highs, policymakers are trying to keep consumers spending steady without overwhelming the market. Next, we have housing market concerns. Rising mortgage renewals and affordability issues have put pressure on the real estate sector. And business investment decline. Higher borrowing costs over the past year slowed down investments in various industries, particularly real estate development. The goal? Stimulate borrowing, increase consumer spending, and maintain stability in the housing markets like Toronto. However, some experts warn that cutting rates too aggressively could lead to inflationary pressures rebounding, which means this could be a short-lived drop if economic conditions change. All right, so how does this actually affect mortgage rates? The key takeaway here is lower borrowing costs. With a 2.75% benchmark rate, we're already seeing 5-year fixed mortgage rates drop below 4%, something we haven't seen in years. Here's what this means for you. Lower monthly payments. If you're getting a new mortgage, lower rates reduce your monthly payments. Higher affordability. Buyers can qualify for larger mortgages with the same income. Renewals get easier. Those renewing their mortgages might avoid major payment shocks. So let's break it down with an example. So before this rate cut, a $700,000 mortgage at 5.25% had a monthly payment of $4,200. Now with rates dropping closer to 3.75%, the same mortgage would cost roughly $3,600 a month. That's a $600 difference. So additionally, if you're in a variable rate mortgage, your payments will adjust downward over time, offering immediate relief for those who have been paying higher rates for the past couple years. However, this doesn't necessarily mean rates won't go back up in the future. The Bank of Canada could change course if inflation spikes again, like we saw previously. Also, keep in mind that while mortgage rates are dropping, lenders may still be cautious. Some banks have been tightening their approval criteria, making it more difficult to get a loan despite lower rates. So, having a strong credit score and financial history is more important than ever. Now, let's talk about the impact on the Greater Toronto real estate market, because this is where things get interesting. Over the past year, Toronto home sales have slowed dramatically due to high borrowing costs, with February 2025 home sales down 28.5% year over year. With interest rates coming down, here's what we're expecting to see. 1, more buyers jumping back in the market. Lower rates mean better affordability, which will likely bring pent-up demand back into the market this spring. 2, home prices stabilizing. While Toronto saw some price correction in late 2024, Lower rates could prevent further declines and even push prices back up in certain areas. 3. More listings hitting the market. Roughly 400,000 mortgages are up for renewal in the GTA this year, and many homeowners will face higher payments than they originally signed up for. This could lead to increased listings and some choosing to sell. One thing we can't ignore, though, is we could see these rate cuts reignite the housing bubble. Historically, when borrowing becomes cheaper, demand surges. If too many buyers flood back into this market too quickly, we could see rapid price increases, making affordability a challenge again. Some analysts warn that if the Bank of Canada continues slashing rates aggressively, we might see overheated markets like we had in the past, with bidding wars and price spikes. Now, we have already seen the bidding wars for some certain home types happen across the GTA, but in other pockets, we are still seeing terminated listings and price changes. Also, it depends on the community and the home type that the property is in. So if you would like to know more information about a community that your home is in, or a community that you are looking to potentially purchase in, feel free to click the link in the description below to book a strategy call with me at a time that works for you, and I'd be happy to go over the numbers. But for now, we don't have enough data to say for sure, but if rates stay low for an extended period of time, demand could outstrip supply and we'd be right back where we started. So how about some strategy for if you're planning to buy a home in the Greater Toronto area? How do you actually take advantage of these lower rates? 1. Get pre-approved now. With rates dropping, competition will increase. A pre-approval locks in your rate and gives you an advantage when making an offer. 2. Consider a shorter term mortgage. If you believe rates will drop further, a 1 to 3 year fixed mortgage might be a better option than committing to a long-term fixed rate. Next, negotiate with the sellers. With increased listings expected due to mortgage renewals, there might be some cases, not always, but some sellers may be more motivated to negotiate, especially on price or closing costs. And lastly, act before the demand surges. Right now, rates are dropping, but competition is still relatively low in areas. If you wait too long, you may find yourself in bidding wars again. Lastly, the bottom line is the best time to buy is before everyone else jumps in. So if you've been on the fence, now might be a time to start seriously looking. So there it is, the latest rate cut and what it means for Toronto home buyers. With interest rates finally dropping, we could see a shift in the market sooner rather than later. But real question is, what's your next move? Are you thinking about buying soon, or are you waiting to see if rates continue to drop even further? Let me know in the comments below. And if you did find this video helpful, hit that like button, subscribe to the channel, and stay tuned for more real estate updates. I'll see you in the next one.